Good evening, traders and investors. It's Tuesday, October 21st. Looking at the charts, equities in general, pretty flat day. We had the indices closed mixed. No real excitement there, although there was a ton of excitement in the precious metal space with a little bit of a meltdown kind of taking place with everyone rushing for the door. But let's just take a look at the equities first. So equities are at the upper end of the range, stuck at resistance. These are inside bars in this big down day from tariff news. If we look at the S&P 500, pretty much doing the same thing. It's not quite, pretty much at the upper end of the range. And if we look at the Russell 2000, it's pretty far away from the top. So we're going from the large mega techs are nearing all-time highs. Yet the majority, as we move away from them to smaller caps, the stock market is further away from its highs. So we're definitely seeing a little bit of fear, riskier trades or traders are moving away from the smaller caps at this point, trying to figure out what to do. Today, the meltdown, though, was definitely in precious metals. If we go take a look at gold, we've had the biggest one-day sell-off in gold since 2013. So this is a huge move. We have been talking about it over the past, right when we hit this Fibonacci level over here, which is where we locked in our discretionary trade. If you took this extra little side trade with gold, we locked in profits, had a sharp pullback. And then, of course, I talked about how once you hit this level, we're in no man's land in terms of we don't know where the high is. We can't really measure it. And volatility is going to keep increasing. And I mentioned that the last 2 or 3 days saying, get ready for big 4+% back-to-back days in gold. It could have a huge drop. It could have a big rally. It could have both. So we still could see gold and silver have a big explosive move to the upside. But today we're definitely seeing money flow out of gold, silver, and miners. And as people have piled in, chased this price higher with FOMO, as it seems like a crowded trade, those who are going to get into the precious metal space, I think, have pretty much got in. And most of them generally get in who have held out the longest, usually right near a short-term significant high. And then the market usually likes to take a bit of a hit there. Now, if we look at silver, it's done much of the same thing. It didn't push up to all-time highs, but it's definitely having all-time highs just recently. But overall, it's pulled back in a more significant way. Definitely, it's a more volatile asset, so it always moves much more than gold. And if we look at the silver miners,